What's up, guys? It is Flash back with some more charts and another video. Today is Wednesday, March 20th, right around 6:15 p.m. Eastern Time. Today, I want to talk about, I mentioned this rotation that could potentially be happening. And what I mean by that is a rotation of money that comes out of broader based equities, be it the S&P, be it the NASDAQ, be it Nvidia, the Magnificent Seven. We can make an argument for Bitcoin. A rotation from those assets into commodity driven assets. And what I think is that main puzzle piece, that main thing that we want to be watching to tell if that rotation is taking place is the gold versus S&P 500 ratio. And that's what I have on the screen here. XAU USD, which is gold, over the SPX. And what I think that's going to tell us is as gold outperforms the S&P general equities, capital will flow into those commodity driven assets, those equities. And what I mean by that is your uranium, your silver stocks, gold stocks, miners, oil, oil equities. That's what I'm talking about, rather than, a PayPal or a Tesla, for example. And so that's what I'm really trying to identify is can we play this commodity bull market, and can we play it accurately? Can we play it with precision? Um, and so if we zoom out here, I'm going to go out to the quarterly chart, quarterly time frame on this chart. There's a lot of lines on here, but what I really want to point out is, this is the lower end of the ratio, this is the higher end of the ratio. And so yeah, sure, I have this big bull on it that covers several decades. Not sure if that's going to play out or not, but once gold really starts outperforming the S&P as it did back in the early 60s all the way up through 1980, as it did from 2000 to 2011, we want to catch those runs and be a part of that. And I think you can kind of see this ship is turning. This rotation is happening. It's just taking its sweet, sweet time, which is, it's okay, but some of us can get a little impatient. But so I have this breakout line. We're kind of at the bottom right side of this bowl. We don't know if that's accurate yet, but if this really gets going, we're going to see commodities really, really take off. And I think, say for example, we look at URA, we look at this almost daily now. This is kind of leading the way, it looks like. This could be telling us, yep, commodities are waking up. This move. I think if gold versus the S&P continues to go up and to the right, uranium is really going to be a beneficiary of that. So I hope that makes sense. I'm trying to explain that as best I can. And so this is gold. If gold is going to outperform the S&P, we want to see what assets are going to outperform gold, for example, right? And I hear the Bitcoin argument all the time. Maybe we do want to see what is going to outperform Bitcoin. Bitcoin's been the best performing asset in the last, 10, 15 years. But again, I'm going to repeat this as I've said before. Bitcoin hasn't lived through a true bear market in general equities, in the S&P, for example. And in my opinion, Bitcoin is highly leveraged to the NASDAQ. So if gold is going to begin to outperform the S&P and the NASDAQ, I too think gold will outperform Bitcoin. And so again, putting that aside, if gold is going to outperform the S&P, we want to find assets that are going to outperform gold, right? We want to compound our wealth, compound our hard-earned money, right? And so this is where we can use ratios, and I have some of these pulled up here. The ratio versus the S&P is right here in the red, and the ratio versus gold is right here in the green. So looking at URA versus the S&P, looks like a bottoming formation to me, in that we're just trying to kind of break out above these two horizontal lines and begin our run up. And, depending on how far up here we get, say we get 0.05, that would be 0.05 times whatever the price of the S&P is at the time. And so, say for example, the S&P is at 4,000 times 0.05, that gets you to $200 URA. That gets us up here. See if I can, that gets us up here. Again, that's within the bowl. It's within the realm of possibilities, I think. And so again, URA versus gold. Again, it also looks like a bottoming formation. And so, the point I'm trying to make is, let's look for assets. Again, I think it's going to be an URA. I think it could be an XOP, SILJ, GDX. Let's look for assets that are going to outperform gold and the S&P. And just to kind of bring it home here with Apple, Apple has had its run. Like, let's go way back here with Apple. This is when it broke out versus gold. Back in 03, early 2000s, late 90s, went on this crazy run. This is when it broke out against the S&P in 04. And now look at Apple. It's kind of finishing its run, I think. It's breaking down versus S&P. Likely to break down versus gold, I think. So that's the point I wanted to make today, guys. I hope that was helpful. I'm not sure if I explained that, but it's the best I could do. And I think it's the right mindset. So drop me a like, leave a comment if you think this is helpful. Again, a different perspective. And I'll see you guys in the next one.